when we're talking about people who have existing HELOCs or HE loans, or in this case could be credit cards or lines of credit, because the rate has dropped. I remember when even a year ago, it seems like the rate was around 9.99, and now it's like at 8.275.
Right.
They're actually going to see a difference in their payment and the rate they pay on their next payment. Is that correct?
Yes and no. If you're a homeowner with an existing HE loan, a fixed rate segment,
yep. Okay.
Those are not going to be affected by the Fed's action last week because they are fixed rate loans. They don't have a feature where they're tied to an index like the prime rate, so that whenever the prime rate changes, in this case it's gone down, that they're going to see their rate go down. So if you've already got a fixed rate loan, then what happened last week doesn't affect you. But if you've got a HELOC, particularly if you got one in the last year or two, and with most traditional HELOCs, most of the ones that we've done had the traditional 10-year draw period, and they're tied to prime. You should, by the time you get your next monthly statement, you should be seeing a 0.5% reduction in your interest rate, your note rate, and that will directly affect your monthly payment. It should show as lower. And so, to the extent that the forecasts now are that the Fed's going to continue, I'm a little cautious about it. I would kind of caution folks to be careful here, but it's like the media is portrayed it as, okay, we've finally gotten the first reduction, and now we're on this downhill ski slope, but we're just going to see multiple reductions over the next couple of years, like it's just a given. Well, yes and no. I mean, I wouldn't urge people to just count on that. But that's being said, let's think positive here. The expectation is 2 more Fed meetings are going to occur this year, November, December, and the expectation is they're going to lower the Fed funds rate again. I'm going to say 1/4 each time, so that's another 0.5%. So it's possible by year end, a HELOC borrower, somebody who's already got one, should see now a full 1% improvement in their rate since last week, if that bears out. And then of course 25, the forecasts are we could see as many as 4 Fed funds rate reductions, and that's going to drop you even further. So you already got that HELOC in the last year or 2 years. It's looking, cautiously optimistic. You're going to see some pretty good improvement in rates on that loan for the next year, probably a couple of years, and obviously that's going to be a good thing for them. So, now, if you're on the fence about getting a HELOC, this might be a good time to look at that, because if that bears true as to the predictions for further reductions in the Fed funds rate, now, may be good timing.